So good morning, everyone. My name is Katie Doherty. I'm the president and CEO of the Kennebec Valley Chamber. And thanks for joining us this morning for our Small Business Resource Team webinar, focusing on if your business still needs help. The pandemic is still out there and our businesses are still struggling. So SBA is here with us today to help share with us some programs that they still have going on. Today, we are joined by Diane Sturgeon, the District Director for the U.S. Small Business Administration's Maine District Office, and William Card. I'll have him wave his hand as well. He's not speaking, but he is our person here in Kennebec County, and he's a great resource. If any of you guys need a follow-up, he'll answer any questions that you have. So Diane joined SBA in April 2012 as a lender relations specialist and has served in management role at the Maine District Office for more than 8 years. She began her career as a teacher and coach before moving into the banking world, where she has more than 10 years experience with both national and regional community banks. So thank you, Diane, for joining us today, and I will hand the program over to you.
Great, thank you so much, Katie. We really appreciate everybody joining today and appreciate the Kennebec Valley Chamber for hosting this event. I am going to share my screen with the PowerPoint and go through the PowerPoint, but feel free to pop questions into the chat if they come up as I am working through the PowerPoint, and we'll also answer questions at the end. And I'm happy to answer questions about any SBA related programs or anything else we can do to help, anything about what we discussed today or anything else that's out there. Also on the line today, we have Bill Card, who's an economic development specialist in the mid-coast and kind of the middle of the state region, his coverage area. And then we also have David Culp, who has recently joined our team. David is an outreach and marketing specialist, and his primary focus is going to be lender relations and the loan programs. Once we get him fully up to speed, we were joking a little bit before he joined about how complicated our loan programs can be if you're new to the system. So it's hard to be an expert when you can get dumped right into it. So we're getting him up to speed, but you will see him out and about even more often. So I am going to go ahead and share my screen. If I can remember to click the blue button so you will see it. That is usually my biggest challenge. Let's see. I'm hoping you all see my screen now. If you don't, somebody give me a yell. But what we did want to talk to you a little bit about is the fact that there are tons of different resources out there. We've heard a lot about PPP. We've heard a lot about economic injury disaster loans, which we will talk a little bit during this, Restaurant Revitalization Fund, SFOG, state level grants, all of those things. But there are other resources that have actually always been out there and are available to you in your business that can help you as you try to work your way, not only through the pandemic, but just on your business in general. As I said, we'll cover both the free and confidential technical assistance programs that we have, some traditional funding sources. I'll talk a little bit about our access to capital programs and some other resources for capital if you do need funding, and our expanded economic injury disaster loan program. We have 4 SBA funded resource partners. There's the Small Business Development Center, SCORE, Veterans Business Outreach Center, and Women's Business Center. You'll hear us sometimes talk about our Big P resource partners and then other resource partners. So not only are our resource partners out there and available to you, but we have a ton of other resources in this state. And the benefit of using one of our resource partners is they're tied into that entire network. So if they're not able to help you, they'll find somebody else who may have the specialized knowledge that you need. And you can use these resource partners really soup to nuts through your business. It can be when you're at that spaghetti chucking stage where you're just trying to figure out, do I even want to be a small business owner? As you start up, as you develop and grow your business, and also as you start to think about succession planning, or how are you going to retire from your business? Are you going to sell the business? Are you going to, is it somebody in your family going to take over the business? Are you going to just shut the business down, and how best to do that so that you can capitalize on what you've built over the years? The Maine Small Business Development Center is the first resource partner I want to talk a little bit about. We have their locations and phone numbers on this slide, but really, I would say go to the website, mainesbdc.org. Not only can you request your advising session by going to that website, but there are a ton of other resources out on that website. They have a very dynamic online training program that is out there, and you can pick and choose what modules you want to work on. It's really been expanded recently, so it's a wonderful resource if you're finding you're struggling a little bit with your financials, or you're struggling with marketing or whatever. Go out on that website and take a look. There are a bunch of resources, and you also can put in your request for advising. At this point, the vast majority of all of our resource partners advising is still remote, so it's not going to matter where you're located. They're going to work with you to figure out the best way to reach you and to work with you for that free and confidential advising service. And we always like to stress this is confidential. All of the services of our resource partners for business advising are complimentary. You do not pay for those services. You've already paid for them with your tax dollars, but it's also confidential, which I know in a small state like Maine, where we all sort of know each other, and everybody, if they don't know you, they know your mother. It's that sort of place. You don't have to worry about that. All of our advisors for SCORE, Women's Business Center, Small Business Development Center, and Veterans Business Outreach Center are kind of sworn to secrecy. The only time they're going to talk about you and your business is with your permission, if they loop in another resource. I get calls as, district director for the Small Business Administration from one of our resource partners, and they won't give me the name of the business unless that business owner has told them it's okay. I'll get it's a brewery in the Portland market. Well, you can't swing a dead cat without hitting a brewery in the Portland market. So I have no idea who they're talking about, and this is their question, and then they'll kind of talk through it. Unless their client has said, they can say who it is. And we at the SBA are also kind of sworn to secrecy. We're not going to be talking about your business out and about. So understand it's free and it's confidential. SCORE Maine is one of our other resource partners. SCORE is a volunteer-run organization. They are a national organization with chapters in each state, and then each state has a state-level chapter. And then in Maine, we have three additional chapters. We have the state organization, and then we have what will become, as of October 1st, they're going through some rebranding right now, just to make it a little more logical about what their names are, because it has always been Portland SCORE. Well, Portland SCORE is going to become SCORE South, or Southern Maine SCORE. And that's because they do cover that entire market. They are not just Portland based. They actually have advisors all over the southern part of the state, and they service all over the southern part of the state. Then there's Western Maine SCORE, which currently is called Oxford Hills, the Oxford Hills chapter. They'll cover kind of the western part of the state and a swath down through. And then there is Northern Maine SCORE, which is primarily located in Bangor, but covers down east, northern Maine, all over. They've got a branch in Belfast. They kind of slide all the way up to the Waterville area. So we've got the entire state covered with our SCORE chapter. And again, I say go to their website if you want to request their free and confidential advising services. They also have some training and information out on their website that's very helpful. And that's just scoremaine.org. And they will get you matched with the advisor best suited for your needs. So when you fill out your questionnaire, they're going to ask about your business type. They're going to ask what your primary need is. And then they're going to determine which advisor has the best skill set to help you out. And with SCORE, a lot of times they'll bring in a co-advisor. They'll bring a subject matter expert in, who you'll have one lead advisor who you have a relationship with, or a mentor who you have a relationship with. And then as needs arise, they're going to bring in a subject matter expert who can kind of help you dig in a little bit more. And if we don't have a subject matter expert in this state, they then can reach out to their nationwide network of advisors who will be able to, answer your questions and help you out. So tremendous organization. We're very, very lucky in this state. All four of our resource partners are very strong and work very well together. But we're especially lucky with our SCORE chapter, because we've had the Portland SCORE, the Southern Maine SCORE, has been the #1 chapter in the year before. They've been the #1 small market chapter before. We have just a tremendous network in that group. Then we have our Women's Business Center. This is a small but mighty crew. I've actually been doing my annual meetings with them just recently and talking about the number of people they have assisted with the small staff they have. And it is mind-boggling. I don't know how they do it, but they are a tremendous resource. They're hosted by CEI and have locations in Portland, Farmington, and Machias, but they cover statewide. Again, that is one of the benefits of being able to do so much virtually. And even once COVID is past and we're beyond all of this, I'd like to believe we'll keep up this virtual where it's helpful. I mean, there are times where for you to leave your business and go to a mentoring session and come back, it just wouldn't make sense. You don't have the time to travel, but you could set aside time for an hour meeting and just close your door and do it online. They also teach classes, as do SCORE and the Small Business Development Center. They'll help you with launching your business. They'll help you with developing and growing your business. They'll help you access capital. They do, in Maine, we have a couple of different cohort-driven programs that they do, and they a lot of times are doing those in conjunction with another resource partner, like they've partnered with SBDC or they've partnered with SCORE for the Propeller program. They have another one that is focused on helping women find their voice and learn to speak up. And I'm blanking on what the name of it is. But if you go to ceimaine.org, the website, you can request advising. You can see, again, what they have for trainings out there, and you can get registered for any of those. Phenomenal resource. Strongly recommend that you take advantage of that. And then we have our Veterans Business Outreach Center. The Veterans Business Outreach Center is specifically targeted towards veterans. Women's Business Center specifically targeted towards women, but they will service, they service anybody, male, female. So don't worry about that. If they have a program that you want to sign up for and it makes sense, go ahead and do it. Now with the Veterans Business Outreach Center, we have Holly Aker, who is located here in Maine, but that center is hosted by CWE. That's an organization out of Rhode Island, but they have actually opened an office here in Maine to better serve our veterans population. They will do a lot of the same advising that our other resource partners will do, and they also buddy up with other partners. They are that resource where you go and you talk to them and you say, this is what my need is, and they go out and help you find who is going to be your best resource. So tremendous resource as well, and definitely recommend if you are a veteran that you reach out to that group. Now, accessing capital right now, it's, every time we go through something like this, I mean, obviously we've never been through something quite like this, but we've gone through other ups and downs in our economy. And one of the things I've heard, because I was around for the crash in 2008, I was working in a banking situation then, you hear is, oh, I can't get money. I can't find any money. I need capital. I can't find anyone to give it to me. There are sources out there. If you can't find the funding, it may be that you're not looking in the right place, or you haven't quite gotten yourself to a place where it's a good idea for you to get that funding. To get to that place where it's a good idea for you to get to funding and to really focus your need, that's where the resource partners come in. Once you're ready to seek financing, first thing I always say is go to the bank or credit union you have a relationship with and ask them about the financing needs. Say you need working capital, say you need to buy a piece of equipment. If they can do it without us, absolutely get that loan through their traditional portfolio process and don't use an SBA guarantee. But if they say, geez, the collateral isn't quite there, or things in your industry are a little shaky. If you're in the hotel industry, things are a little shaky, although it's been super busy this season. Whatever the reason may be, you're going through a change of ownership, or one partner's buying another partner out. You have you're a startup. This is a new business, or maybe you need to stretch your term a little bit to make the payments more manageable. That's where the bank may come to us. If they just they take a look at what you need, they take a look at their credit policy, and they're just like, I love your idea. I feel like you'll be able to pay us back, but I just need a little something more. They then reach out to the SBA and we potentially guarantee the loan for you. The relationship at that point is between the SBA and the lender. You will have to do just a little bit of paperwork, but the lender's going to do the heavy lifting as far as contacting us, getting that guarantee, and moving forward. If you go through a bank or a credit union and they still are like, we just can't quite get there for you, I always encourage them never to say no. What I tell them to do is say no, but you know who might be able to help you out? One of our resource partners, SCORE, SBDC, Women's Business Center, or Veterans Business Outreach Center, or who who might be a better lender for you, and to make a referral to one of our alternative lenders. SBA has some non-traditional lenders that we either fund, give them the money so they can lend it out, or they're non-traditional lenders who can use our 7A Guarantee program. Community Advantage lenders can make loans up to $250,000, and they will have a 7A guarantee on it, which again is the same thing the banks get. It's just that they are making slightly riskier loans that the banks would not make. In this state, Eastern Maine Development Corp is our Community Advantage lender. Then we have 5 micro lenders. Micro lenders can make loans up to $50,000. So they can go as low as $500 up to $50,000. And we have 5 of those in this state: AvCog, CEI, Community Concepts, Mainstream Finance, and Northern Maine Development Commission. Each of them have a specific territory that they cover. CEI and Mainstream are statewide. AvCog covers the Tri-County area for them. Community Concepts primarily is in the southern part of the state, but I believe they can actually go statewide as well. And NMDC is Washington and Northern Maine, Aroostook County. So they will offer not only the loan, but they'll offer technical assistance. So they'll do some of that business analysis with you. They'll sit down with you and say, okay, what's the situation with your business? What exactly do you need the financing for? How are you going to pay this back? What's the long-term goal here? And kind of help you out there. They also offer some trainings. Maybe they'll offer some QuickBooks trainings. Maybe they'll offer some other things, because we also give them money to offer that technical assistance. So in that case, your loan is with that micro lender. With the other programs, the loan is with either the bank, credit union, or the non-traditional lender like EMDC. And the SBA is just there to kind of offer those lenders guidance and make sure that nothing predatory is going on. We don't worry about that with any of these lenders or with our banks and credit unions in this state, but you can get yourself in trouble, especially if you go out there and you go to some of those online lenders. You got to be real careful with those fintechs. There's the equivalent of a payday lender out there for commercial lending. And I have literally seen one of those drive an existing business out of business with their predatory practices. So just be cautious. Again, that's where one of our resource partners can be helpful for you. They can help you develop your plan for your ask for financing, and they can help you make sure that whomever you are getting that financing from is not going to put you in a worse situation than you're already in. So you definitely want to use those resources. We have a tool out there also on our website called Lender Match. Lender Match is what I always call the equivalent of Match.com for lenders and borrowers. The lenders have gone in and set up a profile and said, this is who we are. This is the type of lending we do. And this is the type of borrower we're looking for. We're willing to do startups. We're willing to do loans as low as this and as high as this. We're willing to look at this type of business based on how the longevity of the business. Is it a new business? Is it a business that's been open for at least 2 years? That sort of thing. So they put in what their profile is. And then the borrowers go in and say, this is what I'm looking for. This is where I'm located. And here's a little bit of information about my business. The system then goes out and matches you. The lender will get an email saying, hey, you have a potential match in the system. And then they choose whether or not to reach out to you and contact you. If you use the system and you do not get a contact, I can't remember if the system actually bumps out a referral to either our office or a resource partner. But if you don't get a match within a couple of days, reach out to us and we'll hook you up with a resource partner. And we may also be able to give you some guidance on what type of lender might be doing that type of loan, whatever you're looking for. So really handy program. It's gotten more dynamic over the years. We've added some more specificity into the matching process. So we're getting better matches. We're learning a little bit from Match.com. Now, one disaster relief program that is still out there that's specific to COVID is our COVID Economic Injury Disaster Loan Program. This is a specialized disaster loan program. The SBA has always offered disaster programs. It's actually the only direct lending that we do. And, like right now we have one going on in this state in some specific counties for the drought. This program is specialized. So one thing it's important to understand, and I'm trying to make sure everybody is aware of, is that this program comes to an end on December 31st of this year. It ended on December 31st of 2020. Congress enacted an extension. It only takes us through December 31st of 2021. So you have to have an approval by December 31st of 2021, unless Congress acts and extends the program even further. Excuse me. So what this program is it is a loan. There are some advance aspects of this. You may have gotten a COVID advance or an EIDL advance at the beginning of the program, and that was like $1,000 based on how many employees you had. With, I believe it was in the Economic Aid Act, Congress enacted a second wave of those advances. They're targeted EIDL advances and supplemental targeted EIDL advances. Those are grants. If you get one of those advances, you do not have to pay it back, but they're very specific. It's got, you have to be located in a low income area, or a low income community, or I think is the way we say it. But that is based on some rules, a mapping tool that's been developed based on some IRS rules. It's not anything we can override. So if the mapping tool comes back and says, no, you're not in a low income community, you're not in a low income community. There's nothing we can do. You don't qualify for the advance. So the advances is one step. And then if you get the advance and you're a small business, tiny micro business, less than 10 employees or 10 employees or less, and have shown a specific amount of loss in revenue, then you may qualify for a supplemental advance. So that's all handled through the same system as when you apply for an EIDL loan, which is what I'm going to talk about here. The EIDL loan itself is a loan, does have to be paid back. It's at a 3.75% interest rate for for-profit businesses. Nonprofits are at 2.75, and there's up to 2 years of deferral on your payments. So we're not going to give you the loan and immediately expect you to start repaying it. You've got up to 24 months where you won't have any payments due. There's no prepayment on this loan, so you can pay it early. You can make payments during that deferral period if things, if your business is able to, but just know it's 3.75 fixed interest, which is nothing you're ever going to get from a traditional lender, fixed for 30 years. And again, 2 years deferral. It's stretched like that to give you smaller payments. And there are flexible uses on this program. It's always been allowed for to be used for working capital, which, payroll, paying the light bill, paying your mortgage, paying your rent bills, that sort of thing, buying inventory. That's always been allowed. And you can make regular principal and interest payments on your loans. With some changes that have gone in fact, now you're able to actually pay federally guaranteed debt, which you had never been able to use it for before, and you can prepay some loans. So it's not there for a true refinance. You can't take, like you have an existing mortgage and you want to slide that on over to 3.75 fixed. You can't do that. You can't pay off the mortgage, but you can make your regular mortgage payments. You can get your rent or your mortgage caught up. You can catch yourself up with vendors. All of those things are eligible expenses. And as I said, it's a direct loan from the SBA. So you'll go onto our website, you'll fill out the application, you'll work with us, we'll fund the loan. Here's a little table. It's a little busy, so it's a little overwhelming at first. Don't panic. The loan, our statutory limit on EIDL loans is actually $2 million. We've always had the statutory ability to make a $2 million loan, but a decision was made early on by the administration to make loans only up to $150,000 because there was such a high volume of applications and we had a limited amount of funding. So then we've changed that and we've gone up to $500,000, and we're making loans right now up to $500,000. So there are people who got the smaller loans early on, have come back and requested an increase. So if you got an EIDL loan and you're like, I need more money than this, come on back and request an increase. There's information about how to do that right on our website. We're going to do the $500,000, have an exclusivity period on $500,000 loans from September 8th until October 8th. And then on October 8th, we're going to start going back up to that $2 million mark. Now, the EIDL loan is weird. You go in and you fill out the application and you don't ask for a specific loan amount. What you ask for, what you do is you put in your information, and then based on your gross receipts figure and the difference between, pretty much the difference between gross receipts and cost of goods sold, we annualize that and look at what 2 years would of funds would be for you. So we're giving you 24 months of pretty much your working capital to support the business. And so that's where we determine the loan amount. So SBA will figure out the loan amount for you. So we're going to the higher loan amounts. We are increasing the flexibility on payments. As I said, you can now make regularly scheduled payments on federal debt, and you can prepay, you can make your regular payments and prepay on commercial debt. You cannot fully refinance your commercial debt. You can make prepayments. So I think you could, and we haven't gotten a real clear definition on this, but I think what it'll allow you to do is make the payment for that 2 years if you want to do it up front and just kind of take care of that straight away. Or you can pay it off early if it would have paid off during that 2 year period that we're covering. We again are allowing up to 24 months of deferment for all of these loans. There are affiliation rules because we are the Small Business Administration. We don't run into it very often in this state because 99.5% of our businesses, I think it is, come out as small based on SBA size standards, but you can get into a little bit of trouble, especially where we see it the most in this state is in the hotel and restaurant industry. If you have affiliates, if you own multiple businesses, or if you're able to control multiple businesses, either with a negative or positive control. So what we've done with this change is we've said that the affiliate rule has been simplified. We're kind of following the rules we use with the Restaurant Revitalization Fund, where we talk about maximum exposure with SBA. It's $10 million as far as this program is concerned, and the number of businesses or the number of locations you have and the size at those locations rather than the affiliate size standard. Again, not something you have to get too wound up about, will not impact most of us, but the application itself will talk you through that process. And we've created a little bit of a specialized program for some specifically hard hit NAICS codes. And like I said, that $10 million limit is a maximum aggregate limit. So it's if you have multiple businesses, like I looked at one the other day, there were 38 businesses, affiliates. It was the hotel industry, and they had set up separate businesses or separate LLCs for each of the hotels, which makes perfect sense, but it was a lot to wade through. So all of those loans could not total more than $10 million. At that point, you hit your max with our program. Now this change, it's highlighted in green. One of the things is we are being transparent with our credit score rules. And I'm going to just say this on credit scores. If you think you know what your credit score is, maybe you do, maybe you don't. It depends on which credit bureau your lender pulls. That credit score you get from I'm trying to think, there's some company out there that's always telling you, oh, find out what your FICO is. It's not always exactly right. So if you feel like your credit score is low and may not meet this, don't panic. Go ahead and still apply. We'll let you know if the credit score we pull does not meet our standards. On the smaller loans, the minimum credit score is 570, higher loans 625. There are some specific rules around the disaster loan program and what collateral needs to be taken. So we modified those slightly for this program. If your loan is $25,000 or less, there is no collateral taken. There is no personal guarantee. If your loan is up to $500,000, you go up to that $200,000 mark. Anything less than $200,000, you do not have to offer a personal guarantee. It's a loan to the business only. And what we'll take for collateral is a straight UCC filing. And that's just a blanket filing on all business assets. And then for those $500,000 to $2 million loans, we're going to take a UCC filing, and we're also going to look at any business real estate you own, any commercially owned real estate. We're not going to take a lien on your personally owned residence, but we are going to take liens on business real estate. And again, over $200,000, you are going to have to offer a personal guarantee. And as I said, your use of funds, your use of funds is normal business expenses. You can't use this idle loan to go out and buy another business. You can't use it to expand your business, but you can use it for payroll. You can use it for rent. You can use it for your inventory, traditional commercial debt, and also regularly scheduled payments on federal debt and working capital, kind of that catch-all for just all of the regular day-to-day expenses of the business. The simplification on the affiliation rules, these get a little heady. I don't think it's going to impact too many of us, but you do have to always look at affiliation, and that's for size determination with the SBA. Affiliation does not necessarily mean this business and this business have the exact same ownership structure. What it means is there's kind of cross-contamination there. You've got at least one person affiliated or attached to multiple businesses, either with a controlling interest because they manage multiple businesses, or they're on the board of directors and have the ability to control the business, or they have an ownership interest in multiple businesses. And when we talk about ownership, you also have to think about joint ownership with your spouse. Do you and your spouse have 20% or greater ownership of any one business when you combine your total ownership interest? So just keep that in mind. And it's matching the restaurant revitalization fund. That's that RRF definition that we used, which made things a little easier for some specifically hard hit business types and the ones where we most often see the affiliation rule hit. You can use the COVID idle standards, the size standards, these specific size standards, if you meet one of those specifically hard hit NAICS codes. And again, our system will figure all this out for you, so don't worry about it. And if you do have one of those harder hit NAICS codes, it comes down to how many employees at your physical location, not total employees based on the affiliate, all the affiliates added together. So makes it a little easier. The one thing we did put in there to kind of keep some of those big chain organizations or big, really, truly big businesses from taking advantage of this is you can't have more than 20 locations. So if you have 21 locations, boom, you're over our size standard as far as this is concerned. This specialized size standard is concerned. And then we created a limit for the corporate aggregate, which is that $10 million I keep talking about. Again, I don't think we're going to hit that too often in this state. Here are the specialized NAICS codes that get that kind of break there about having 20 or fewer locations and 500 or fewer employees per physical location. Again, don't get too hung up on this. System will figure it out for you. Now, there's this little exclusivity time frame. We are, when we flip the switch for $2 million loans, as those start getting approved, there is limited funding for this program. Up until now, we've been cautious with it, but we weren't too overly concerned that we were going to run out of money before December 31st. If we start making a lot of $2 million loans nationwide, the agency could run out of money quickly. There's also the timeline associated with getting your application in and getting it processed. If you do your application and everything automatically updates through the system, your application should be able to be processed relatively quickly. Where we run into some hiccups is, say, something pops as far as one of our automated systems can't validate something. So we need to reach out to you and get your tax transcripts, and your tax returns and a picture of your ID, the things we usually ask for. And I will openly admit the denial letter that people get is not necessarily a denial letter. It's really a request for additional information, but there are some system limitations. So it's called a denial letter. And it will say something like unverifiable information. That sets my teeth right on edge because it doesn't tell you what information was unverifiable. And it says denial, which just gets everybody really upset with good reason. You've put in this application, you need this money, and now you've waited and boom, you get this weird letter that tells you nothing. Here are the things that we usually ask for and that I always recommend people submit to overcome that denial, to request reconsideration. The letter spells out exactly how to do it. You send the email and information into our PDC reconsideration branch, but they're always going to look for your 2019 tax returns. We're always going to look for an updated IRS 4506T. It's important that you get that form from our system or from our website, because it's a very specific form and the IRS gets wildly persnickety about which form gets submitted for which use of funds. So tax returns 2019, IRS 4506T from the SBA, SBA's website, a copy of the front and the back of a government ID, and a schedule of liabilities, SBA form 2022, I think is what it's called. All of the forms that we require that are our forms are out on the website. So you'll grab them from there. The other thing I highly recommend is send in a copy of a voided check for the account you're going to have the funds deposited into. It should be a business account that matches the business name that is borrowing the money, and it can't be a temp or a starter check. It has to be an actual check. All of these things are for your own protection, for fraud protection, and also to make sure that we're using the correct numbers when we calculate your loan amount, which is why we need the tax transcripts and the tax returns. If you are in a service industry and you've listed a lot of money in cost of goods sold, you want to take a close look at that, because that is generally not really where like your payroll should go. So that's just another one of those things that popped into my head, because we see that hit people quite often. So if you get one of those letters, don't panic. You can call our office and we can remind you what those things are, but submit those documents and request reconsideration, and then it will process through. So here are the what's going on during the exclusivity period. I'm having a hard time with that word. Is we're going to do the $500,000 loans up front first, but you can apply for a $2 million loan. If you think your business is going to qualify for $2 million, you can take the $500,000 first and then request an increase. You do have the ability to request increases with this program. So, just go with the flow, file the application, let us do the dirty work and figure out what exactly needs to happen, and what, what loan amount you qualify for and when you should get funded. You want to make sure that your information on your application exactly matches your tax returns. Same thing on your IRS 4506T. Closely follow the instructions on that form. Make sure you check the bottom box that's a disclosure about the signature, and make sure that the correct people sign that form and sign it, date it, and make sure it has the correct title associated with the business on it. Make sure the address matches the address on your tax returns. Make sure you're listing the correct form. If you file an 1120S, make sure you've got 1120S in there for the form type. There are instructions attached with that form, and there's some information out on our website as well. But like I said, the IRS is super persnickety about processing those forms. They want to make sure everything matches exactly. And then when we get your tax transcripts, we need to see that what you input into our system to calculate your loan amount, which is the numbers from your 2019 taxes, matches what you've actually told the IRS. Here's some details on the application itself, roughly how long we expect this to go. I'm happy we put some timelines out there, but I'm also terrified we put some timelines out there, because when you put a timeline out there and then on 3 weeks plus a day, you as the borrower have not gotten your response, it's frustrating and you're wondering what's going on. You've got that date on your calendar. So, definitely understand these are slightly fluid, but these are what we're striving for on this. And then these are the required documentations for the various loan types. And the way it'll work is you're going to just go to sba.gov/EIDL. The website has a ton of information and has those forms. There's also an FAQ document out there. There's information about that EIDL advance I was talking about out there. And then you're gonna, there's plenty of resources to answer your questions, but go to sba.gov. There's a button there that says, fill out your application. Click that button. You're gonna do your application. And there's a checklist out there for what you're going to need to upload. There's also a sample intake checklist. So what we look at when we get an application. So that'll help guide you a little bit. But take a look at that information, gather all of your documents, and do your application with all those documents in hand. I also wanted everybody to be aware, we send out newsletters on a regular basis. And if you go to sba.gov/updates, you can put in your email address and where you would like to get updates from. You'll get updates from our office. You can also get national updates. You can get export specific updates. You can get women-owned business updates. There are a ton of different types of updates you can get. We try not to be spammy with it. You can unsubscribe at any time, but if you are looking for resources for your business, I strongly recommend you go to sba.gov/updates and sign up for our regular updates. And then there's sba.gov/local-assistance, and there are hot buttons on just sba.gov for all of these things. So don't feel like you got to worry too much about the specific email address. But if you go to sba.gov and click the local assistance tab, you put in your zip code and what type of assistance you're looking for, they'll tell you the resources closest to you. So that will identify SBDC, SCORE, Women's Business Center, Veterans Business Outreach Center, our office, any SBA resources that are close to you, and give you a link to get in touch with those people. And then here's our staff. We are a small but mighty crew in Maine. There's myself as the district director, and then we've got Jim Pino, who sits in our Bangor office or is working remotely now up in the Bangor market. He covers just south of Bangor all the way up through northern Maine and down east as a senior area manager. He's kind of jack of all trades, does some training, does some education, and is a tremendous resource. He's also our contracting specialist. So if you have any interest in selling to the federal government buys everything, goods and services, with everything from #2 pencils to Tomahawk missiles, you can talk to Jim and he will put you in touch with the best resources. We have the Procurement Technical Assistance Center here in Maine that works closely with Jim on matching businesses and helping you get set up to do that. Then we have Brad Curry. He's our senior area manager in the Southern market. He is our exporting expert. So he works directly with our Office of International Trade to stay up to date on all of our export assistance programs. So he's a tremendous resource there. Then we have Bill Card, who's on the call with us today. Bill's an economic development specialist, so he helps arrange things like this, quite often does these sort of trainings, also helps to counsel businesses on some of the resources that are available to them. Keith Lynn sits here in Augusta. He is our public affairs specialist. And quite often, if you call our main office line, Keith is the one you're going to get. And then we have David Culp, who is our new outreach and marketing specialist. And David's primary focus is going to be on lender relations and loan programs. So feel free to reach out to any of us. It's, it's a cliche, no wrong door. If you reach out to us, I would say we're kind of like that Plinko board on Price is Right. We're not necessarily going to do the work. We're going to kick you over to the side to the person who, or the organization who may be your best resource. We don't do the in-depth business counseling, but we will talk through your wants and your needs to help you figure out, who can help you out the most and put you in touch with that resource.